This video will analyze Thailand's residential property market performance with a focus on trends in the condominium sector, which is a key area for foreign buyers. We'll also highlight foreign buyer behavior, including spending patterns, top locations, and leading nationalities. And of course, we'll have a look at the market outlook for 2025. The data was translated from Thai sources such as the Real Estate Information Center and DDProperty, so I hope that this video will give you insights not found in conventional English sources that can help you navigate the market and inform your purchase decisions. And as always, you can contact our team to buy or rent property in Thailand by going to my website, jetgunther.com, or see the link in the video description. And now let's dive in. Residential property sales across Thailand in the first 9 months of 2024 totaled 250,580 units, which is down 7.4% from the same period last year, with a total value of 705.4 billion baht, or $20.3 billion US dollars, down 8% from the same period last year. So we see a softening of the real estate market as a whole of 7 to 8% in the first 9 months of 2024 compared to the previous year. Secondhand properties accounted for roughly 66% of all properties sold, while properties valued at 10 million baht or more accounted for 21.2% of all properties sold. The Bangkok metro area, which includes the capital's 5 neighboring provinces, accounted for 123,099 of all properties sold, with a total value of 428.3 billion baht, or $12.3 billion US dollars. So the Bangkok metro area accounts for roughly 60% of the country's entire market share, while just Bangkok itself accounted for around 38%, followed by Chonburi, which is where Pattaya is, at 9%, Phuket accounted for 3.8% of market share, and Chiang Mai at 3.6%. Now, if we take out the sales of homes and look specifically at the condo market, which is a market that foreigners are able to participate in, condo sales nationwide in the first 9 months of 2024 totaled 83,209 units, up 5.6% from the same period last year, with a total value of 212.8 billion baht, or $6.1 billion US dollars, down 5.2% from the same period last year. So a roughly 5% increase in the number of condo units sold combined with a 5% decrease in total value made 2024 essentially a wash compared to 2023. Now, when we break down this number even further to condo sales specifically to foreigners, foreign buyers accounted for 11,036 condo units sold, an increase of 3.1% from the same period last year, with a total value of 51.5 billion baht, or $1.5 billion US dollars, a decrease of 1.5% compared to the same period last year. So foreigners accounted for around 13.5% of all condos purchased nationwide, but their purchase value accounted for a larger share of the condo market at 24.4%, which means that on average, foreigners spend more on condos than the average Thai. Compared to the entire property market, which includes both homes and condos, foreigners accounted for 4.4% of all properties sold and 7.3% of the total market value. Keep in mind that this data only includes foreigners who purchase condos in their own names and not those who purchase homes in their Thai spouses' names. So the actual contribution of foreign buyers to the market is likely higher than the official figures suggest. Of the around 11,000 condo units purchased by foreigners, 4,861 were secondhand condos. This means that around 44% of all condo units purchased by foreigners were secondhand units. Condos 10 million baht or over accounted for around 35% of the total market share of foreign buyers. The top 5 provinces by purchase value for foreigners were Bangkok at 59%, Chonburi at 21%, Phuket at 8%, Chiang Mai at 3.6%, and Samut Prakan at 3.3%. Now, when you look at market share of foreign condo buyers by nationality, you will have China at 39%, Myanmar at 10%, Taiwan at 6%, Russia 5%, the US at 4.5%, France at 3.4%, Germany 2.8%, India 2.4%, the UK at 2.3%, Australia 2.2%, and all other nationalities comprise the remaining 21%. The biggest change in the past few years is the increase in Myanmar and Taiwanese buyers overtaking Russian and US buyers for second and third place. Indian buyers averaged the highest purchase value and size at 6.3 million baht and 76.5 square meters, while Russians averaged the lowest purchase value at 3.4 million baht and Taiwanese the lowest size at 34.7 square meters. So in summary, 2024 overall was a slowdown year as many Thais surveyed said they were not yet financially ready to pull the trigger as household debt remained high. Now, looking ahead at 2025, Thailand's latest consumer sentiment study at the end of Q3 of 2024 showed that 50% of respondents planned on purchasing a home in the next year. This purchase interest is an increase from the previous third quarter, where interest in condos increased by 19%, homes by 10%, and townhomes by 10%. However, the biggest hurdle in 2025 will likely be the reality of existing household debt, where in Q3 of 2024 there was an accelerating trend in home loan defaults. Non-performing loans surged to 23%, up from 18% in the previous quarter, while the ratio of NPLs to total loans rose to 4.3% compared to 4% in the previous quarter. Most of the home loan defaults were for residents with loan amounts below 3 million baht. Thai banks have taken note of this trend in debt and are continuing to maintain their strict criteria for evaluating mortgages, resulting in a consistently high loan rejection rate. Overall, in 2025, the economy is expected to grow up to 3%, driven by the expanding tourism sector and a likely decline in interest rates.